Good morning. Welcome to CurrencyChange Daily Markets Update on Thursday, the 12th of September 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com. The initial optimism for the Russian proposal on Syria has been replaced by renewed uncertainty over the exact timetable of progress, and especially due to Russia's persistence on the withdrawal of the intervention threat from the US. However, as diplomacy is given another chance, even for a limited time period, the market has now the ability to turn its focus on the next week's FOMC, the upcoming budget negotiations, and ignore the geopolitical development for the moment. On the US dollar, we observe it came under strong pressure yesterday as the dollar index breaks below 81.70, and the UK MPC testimony will be a key event for today. In the US dollar weakness yesterday afternoon looks to have been partially technical, triggered by the break of the 81.70 level on the 200-day moving average, a key support which was broken, due to a continued strong performance in equities, which continues to be generally correlated with US dollar weakness. Today's US job claims will be of some interest after the better numbers last week and the slightly disappointing employment report, but in reality the market is unlikely to be significantly impacted today by US news, and focus remains on the FOMC for next week. In Europe, ECB Sanson ECB member has discussed another LTRO possibility, current policy package appropriate for now, but they are not running out of policy options for the euro. In the UK, yesterday, the UK unemployment rate fell to 7.7% in July, better than 7.8% expected by the market. It moves sterling higher due to the fact that the Bank of England is using this rate as a threshold for its forward guidance framework. The Bank of England stated it didn't intend to increase the base rate until the unemployment rate will be below 7%, which they expect to see in Q4 2016. So slower and slower UK unemployment rate. Estate agents are behind this UK jobs growth. Estate agents have surged to a record level, fueling concern that the economic recovery is being underpinned by a debt-fueled housing boom. Mortgage scheme could lead to house price bubble, once One Today cable on BBC, a government scheme designed to boost the housing market, could lead to some new price bubbles. Sterling remains a main focus for today, with the Treasury Select Committee testimony from Carney following on from the strong labour market numbers yesterday, which pushed sterling dollar to the highest level since February, and euro sterling at the highest level of the year. In Asia, during the night, we had in New Zealand the Royal Bank of New Zealand, which kept rates on hold as expected, but noted that it is likely to raise rates in 2014. The central bank stated that global growth outlook is mixed, with GDP growth in China and Australia slowing down. In terms of live exchange rate, we're currently on sterling dollar at 158.06, sterling euro 118.84, sterling Aussie dollar 193.76, sterling New Zealand dollar 193.77. The pound rose through the June high at 150.73 to above 158. Continued sterling strength run the risk of derailing the nation UK recovery. The relatively weak pound has headed to UK as exports are cheaper as the pound rises, but it seems to not be the case anymore for the next coming weeks. Economic agenda, we have UK time 10 o'clock Europe industrial production expected 0.1%. Then the UK Bank of England Governor Carney due to speak before the Treasury Select Committee during this morning. At 12:40 UK time, ECB President Draghi's speech. At 1:30 US dollar weekly jobless claim estimated 330 versus 323k last week. If you require further information, feel free to contact us on +44 027373 2686 or visit CurrencyChange.com. Have a nice day.